Good morning, traders. It is Tuesday, September the 24th. Taking a look at the charts, we've got the SP 500. This is the daily chart of the futures, and where we're at this point here is we broke out of this August range. We're now trading in this kind of topping zone. Really, this whole topping zone goes right across over into this area. So we are stuck in this previous high. We're at this point we are consolidating. We've had a run up, a pullback, another run up, pull back, another run up. More or less, we've had a little five-wave kind of advance, and now we're flagging in this overall, this larger picture here, this bullish flag formation, and the 20-day moving average is sloping up and slowly catching up. And if this pattern plays out, we should break to the upside. So we'll have to see where things go. We got into position yesterday, somewhere down over here on this day, and we're looking for it to continue to break out and move higher. Now, overall, if we were to look at the this zone over here, we dip down into this oversold territory. Well, that's not quite the tool I wanted. More or less, our short-term momentum cycle dipped down into this low here. The previous session flushed out a little more in the morning, and hopefully we'll find some support here and continue to go higher. More or less, the blue line here is the momentum cycle, very short-term little pullbacks. The yellow here is more of a swing kind of cycle. Swing trading lasts about a week or two, depending on the strength of the trend. But overall, it's getting down to this lower zone, and we're looking for this to continue to go higher. Now, if the equities market does rally higher, we are going to see the safe havens correct. And I know we saw a huge pop in silver yesterday and some other metals. We'll go over to those in just a minute, but let's go from equities here. We'll go over to the chart of bonds. So money usually flows typically, it's either piling into the stock market, the SP 500, which we just looked at, or it's piling into bonds. And at this point, we are seeing kind of the inverse pattern here for bonds. We've got more or less a breakdown, and now it's having this bearish flag formation, which bearish flags are a halfway mark. They're a continuation pattern, meaning this could continue to sell down and go and test this previous pivot low. And overall, the overall longer term cycle here has topped out and it's come down, and the bias is to the downside. We're getting to this 20-day moving average. We're getting right up to this resistance area, this kind of area. More or less, we've got these previous pivot lows in the market and these previous pivot highs. So we're going to start to probably struggle here for bonds. And if the stock market breaks and rallies, then we are going to see bonds flush down, sell off in a much deeper way. And we're going to see the safe havens like metals probably do somewhat of the same pattern. So now let's go over to precious metals real quick here. Gold had another update yesterday. It's still forming this base. It is technically still in an uptrend, but it does have this bearish potential formation where you could argue here it's got a head and shoulders and this kind of broken shoulder, more or less a bear flag forming that points to a potential move to the downside. Now we got this previous spike high right across this chart. Just across this area here, very significant pivot area. You can see it was resistance, became support, it was resistance, and now we're back up at this level. And if the stock market rallies, we're going to see metals bail out here, and we're going to see them sell off and correct in a fairly probably drastic way, because everyone seems to be getting piling into gold here. I am bullish gold long term, but short term, we're at this key pivot point for stocks and safe havens of which way they're going to go. Let's take a look over at silver. Here's silver, had that big pop, instant pop there yesterday, came right back up to more or less resistance, which is where we've got this kind of cluster of price action on the chart where we've got pivot highs. We had 2 days come down here, found support, held for a day and then broke. And then we had a resistance area, and now we're back into this resistance area. We'll see if it can get some traction, but overall, everything is struggling. Safe havens are at resistance. The equities market is having a pause at resistance, and it still has a bullish bias as well. So overall, we are long equities with an SSO 2X ETF, looking for equities to go higher. And I'm keeping my eye peeled for potentially getting into the precious metals, but we do have mixed signals on gold, silver, and miners. They are some are bullish, some are bearish in terms of momentum and direction. So Until we get a clear sign, we will look to get into one once we get a clear direction of which way they want to go. Moving over to energies, natural gas was up almost 2% this morning at one point. It's pulled back a bit. It was dipping down into a bit of an oversold territory, trying to carve out a bottom. The trend is still up with natural gas, and we are getting down into this more or less these cycle lows here, where we're seeing the momentum cycle down, the short-term cycle is down, and the overall longer-term cycle here is still up, and this could continue on for some time before it turns more or less negative. So we'll see if we'll look for a potential setup here in natural gas and look to potentially get long for another leg higher. As we talked about this before, you've got your first key move up. This will be the first more or less significant pullback. We finally broken a little pivot low here, which cleanses the market, and we could see the second half of this move start to take off towards that 3 mark if this can find a bottom and start to rally again. Looking over at crude, down 1% this morning. It still has that ominous kind of bearish feeling to it. Overall, had this huge gap. Let me just draw the gap window here. Had this huge gap window, meaning it closed down here, and then the following session based on news, it opened way up here, creates this huge gap. Now, usually the gaps halfway mark is usually filled fairly quickly. In most cases, 100% gap fills are filled. And if you look at this pattern, we've sold off the halfway mark. We're putting in a little bear flag, and the second half of that move would bring us right back down. So I am bearish at this point on crude. It is holding its ground at this point. You can see it's going right across these key pivot zones in the market where it was resistance, had a day through it, and then acted as a little bit of a support level there. So it's trying to hold its ground, but if it breaks here, we're going right back down to be about the 55 per barrel, and it would probably happen in 1 or 2 bars, I would think, to the downside. So there is that potential of crude dropping quickly to the downside. Last but not least is the utility sector. We are still long utilities. They continue to trend their way higher. Overall, this type of pattern, we've seen it pop up and sell off and pop up and sell off. And now it's grinding up here. It's holding up fairly well. This type of pattern here, we're going to either see a strong pop to the upside or we're going to see a quick drop to the downside. It's going to be pretty abrupt, and I'm expecting it to happen any day. This type of price action is very similar to this, where the market rallies up and then pulls back, and then it comes back up to this area, pulls back, and then it's grinding here. And we're equivalent to right here in terms of what potentially could happen. The stock market could rally, and then the safe haven utilities are seen as a safe haven. This is utility sector ETF, would bail out as people get out of the safe havens and they pile into regular stocks for increased gains. So we are in position that if the stock market rolls over, utility should pop in our favor. If the stock market does crash, we're going to see utility, or if the stock market breaks out and rallies, we're going to see utilities most likely come down and probably stop out at our entry price. We did get our first target. We are in the money. It's a profitable trade, and we've got our stop in place. And we may end up tightening our stop over the next session or so, depending on how it unfolds here, to add a little extra gain to the rest of our position if it does roll over. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.